Good afternoon to you all. Governor, you're welcome to today's press briefing. The format will be, the Governor will give his press briefing for December 2018, and then questions for Governor and PG, who will leave us, and then the rest of the questions will be handled by EDR and the senior management. So you're welcome, Governor, you're welcome to give your...
Good afternoon. This is the monetary policy statement for December 2018. The Bank of Uganda, BOU, decided to maintain the central bank rate at 10%. The 12-month ahead inflation forecast has slightly improved relative to October 2018 forecasts. However, upside risks to inflation outlook remain elevated. Domestic economic activity is projected to remain on a steady extension path in fiscal year 2018-2019 and over the coming years, keeping output slightly above potential. The BOU's economic activity, CIEA, indicates stronger economic performance in the first 10 months of 2018 with an annualized economic growth rate of 7 to 8%. This is an indication that economic growth in 2018-2019 could be higher than the previous projection of 6%. The strong economic growth is in part supported by the accommodative monetary policy stance and the associated rebound in private sector extension, ensuing strong domestic demand conditions, multiplier effects of public infrastructure investments, and improved agricultural productivity. The positive growth performance is projected to be sustained over the coming years, partly driven by public infrastructure investment. The medium-term fiscal framework indicates that public investment should remain at a high level, which should in turn continue to have positive spillover effects on private sector investment activity and spending. Nonetheless, there are risks to the projected economic growth momentum, including the slow execution of public investment projects, unpredictable weather conditions which could affect agricultural productivity, and the slowdown in global economic growth and global financial uncertainty, which could affect the external position. In addition, growth in private sector credit, although on a recovery path, remains below its historical trend, and its contribution to economic growth could be weighed down by the public borrowing requirements and the associated further increase in lending interest rates. The Consumer Price Index, CPI data released by the Uganda Bureau of Statistics indicates that inflation remained subdued, with annual headline inflation remaining stable at 3% in November 2018. Core inflation, on the other hand, declined marginally to 3.4% from 3.5% in October 2018. The low inflation environment continues to be supported by low food inflation. Near-term 3 to 6 month inflation forecasts are lower compared to the October 2018 inflation forecast round, largely driven by a less depreciated exchange rate. Core and headline inflation are forecast to peak at 6.6 to 6.5% and 5.1% in the second half of 2019, which are lower than the previous forecasts of 1 and 0.7 percentage points, respectively. However, the medium-term inflation forecasts remains. However, the medium-term inflation forecast outlook remains largely unchanged from the previous forecast, with inflation forecast to converge to the Bank of Uganda target of 5%. There are nonetheless upside risks to the outlook, including the future direction of food crop prices, the path of the exchange rate, which in part is contingent on the external economic environment, and the ensuing demand pressures on account of the positive output gap. The Bank of Uganda's Monetary Policy Committee assessed the risks and uncertainties surrounding the inflation and economic growth outlook. Based on the assessment, the MPC decided to maintain the CBR at 10%. The bank on the CBR will remain at plus or minus 3 percentage points of the CBR. The margin on the discount rate will remain at 4 percentage points of the CBR. Consequently, the real discount rate and the bank rate have been set at 14% and 15% respectively. This is a monetary policy statement for December 2018. I thank you.